Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, it's your boy Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? Black people, listen, we're going to be doing a full breakdown of Netflix. And as you can see, y'all been doing damage. Ooh boy, wanted to get into this company, Netflix. Boy, definitely want to know where my 1999 is going. But y'all already know how I start off my videos. We need to make sure if we put into a company, we're going to put out, obviously. I don't think y'all going to be putting in Netflix no more because, boy, this has been a heck of a drought. So, do Netflix pay dividends? No, they do not. Netflix do not pay any dividends, which is surprising. I don't think they should, but whatever. We're going to look at the charts. I always give it the 6 months, 1 year, 5, and max. So as you can see, the key points here, there was at 96.22. Took a big dip to 97 here, though. That's within 6 months. And you see within a year, boy, we had this one at the 122 evaluation, dropped down to 111. Really took a dip down here to 78 now. Now they're back at the 96. Then they took another drop here. So if we look into the 5 year, they've been doing good within the 5 years too, man. But today, ooh, Lord, they're taking a big hit, boy. But as far as the max, they've been doing great, 600%, $80 a share. But boy, these big key moments this year has not been good for them. So they've been in the $90 to $80 range, and I can really see Netflix actually falling even under ever since the Michael Jackson documentary. People have been taking that into account and been unsubscribing. So Netflix been hit hard. It was 120. Now they dropped down to 80. You can be, I hate to say it, shoot, this is about the best time to buy shares of Netflix. I hate to say it, but it's totally up to you. Financial advice. But let's get under the hood. Let's see what we seeing, see what we got, all that stuff too as well. Y'all know me, we always go through the financials and the cash flow. We see the chart, and our net income is 3.2 bill, 2 bill, 5.2 bill. So these increases have been making these boys a lot of money. So yeah, 5.2 billion. Netflix has been making a lot of money. Cash operations. Now this is odd. Why your cash operations is the same as your net income? Ooh, now we about to see where the money going. How you making, but you losing in operations. Netflix is online. Not understanding that unless you're buying licenses to movies. That's what I'm probably consist of too as well. So you got to take that into account. No inventories. They don't have any of that. Cash from investing. Negative 8781. Wow. That's low. They're in the negative, almost damn near $1 billion. Wow. Wow. Okay. Nothing to invest for Netflix. God dog, y'all equity don't even make up out of the cash investing y'all been doing into it as well. Financing. Oh, this should be really good. This should be really good. Cash from financing and rate adjustments. Negative 2.50 billion to 1.23 billion. What y'all got to be financing the rights to these movies and TV shows. That's why y'all taking a hit on this. Make sure why the increase is making sense. All right, cash flow and cash leverage. They coming in with 6.6692, so they're making a profit. Leverage cash is 7, so they got $1 billion just to throw around. So they got the money. They financing like crazy. So this is really like what you take off 5, and you're making around 3 roughly. So. Decent on their balance sheets, though. Let's go to the real stuff. The balance sheets where the money really makes sense. So inventory, no. The current assets. Oh, they got 11, 12, 13, 17. Anything this low is that they're evaluating their own company. If it goes past 20, that means they're doing other investment with total investment that they have. So actually investing back into the company. So that's the reason why they don't pay any dividends, because they don't have any outside stuff too as well. So that comes into the play too as well. So I can actually see that. Prepaid expenses, 6 mil. This is actually pretty cool, but man, this is not good. Your total current expenses is 1.43 that year. The highest is you went up, so it's 3.65 billion. So y'all might be licensing these TV shows or making your own TV shows or making your own stuff like that. So that's just where the bulk of these expenses actually coming from. Your total assets is 53.53 mil, which is very good actually. They actually got a good term, but that's just because they keep evaluating their own company over and over again. So I can see it. I can see that actually having a long-term debt, and they're in the billions. Oof. No wonder the increase was making a long-term lease and 1.9. That means the location that they actually total liabilities is 29.89 bills. So God, they got so much stuff. Just to see, man, just, going back to the tangibles and stuff like that. Return on assets, 14%. Yeah, that's just Netflix alone. So Netflix is actually making, whatever earnings are, they're making. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Yeah, off of us. So yeah, 12, 12, 11, 11, 12, 10, 9. Yeah, all this is from us. That whole thing is from us. So if y'all want to keep, putting on it, man, hey, y'all keep unsubscribing. This number gonna change. But the 12 physical year, and they actually made more. So that's just the ads that they put in. But you want to make more. So depending on how long the company been running Netflix long term, but I don't think they're bouncing back to that $100 a share. I think they're going to drop down to like 70, 60 at most. I can see them dropping around 60 to 70 at most, but 50, that's a deep feat. They drop below 50. Netflix is in trouble, like really in trouble. That's just my opinion. But let's go to the perplexity, the bullish, and the bearish. I like to start with the bearish, see the bad before the good. The engagement growth has slowed. People are subscribing. It slowed roughly 2% year over year. Now that's crazy. So y'all are really making an impact. They say it's been slowed down roughly 2% year over year. And nearly long-term revenue is clear high bar, tracking towards 1.5 billion more H2 than justify optimistic projection that Trump spike. Miss and feels rates could be invalid and monetize these entirely. So people are stopping. They just, making bread off them ads y'all getting. So that's about it. And Netflix tier is gaining meaningful traction and company targeting 3 billion ad revenue. Yeah, the ads. That's what I just said. You go to that, one of the plans, you get $8 ads, but they done took so much stuff away, and people that's paying for the ads, shoot, man, I think you can't even watch certain series if you got the ads. It was like, if you ain't paying above 15, you ain't doing nothing on Netflix, basically. No, I'm just being honest with you. You ain't doing nothing on Netflix. And the potential of 7.6 to 8.3 billion, 2030, improving the program to fill rates, as supported in membership positioning and better major players in digital advertising marketing. So yeah, they're making their money off of ads. So really what's keeping them afloat is the ads. The only way y'all can actually tackle that, man, to bring down Netflix, as y'all say, unsubscribing is not going to do it. You got people that unsubscribe, but you got people that just drop their tier, but they still making money. So you have to completely cut them off if you want to make a decision. So that's the only way they're going to lower this revenue down. But they're not, the 2% is not hitting them because the ad revenue is making up for the 2% that they lost, which is smart. I have to say Netflix, boy, they some devious people, but they know how to make money. I hate to say that. Like if you leave, cool. If you drop down a tier, cool. We still making money. You know what I'm saying? So you got to think about the animes they're coming up with, which I'm very surprised they actually get into the anime mix. So they're pulling people from Crunchyroll to them to watch Devil May Cry and stuff, which I don't know why Devil May Cry isn't in 3 seasons. That's why I just didn't want to watch the new one yet. But overall, that's how Netflix is actually making their money, because of the ad revenue, because of the 2% loss. It's not really hurting them at all, because they're pulling in like $3 billion off just ads, y'all watching ads. So, I mean, roughly, hey, they're doing what they need to do to make the money. I hate to say it. Let's go to the consensus of Netflix. The consensus of Netflix, as they say, generally buy and moderate buy, which I think is a buy hold situation. But the moderate buy is because they took that dip. That dip is hurting them, man. That dip is really bad, because I don't know what y'all did, but I think that's making a little bit people worried, because they don't know how far y'all going to go with this. So as long as they see, I think the concern of Netflix is going to hit if it drop under, if that jump go into the 40s, Netflix is about to implode. If they go under 40%, that is going to be a problem. Like, that's not good. I mean, yeah, they're making ad revenue, but the plummeted of the company and shares. Plus, y'all don't pay dividends, so people are actually paying out their pocket to see capital gain, and they seeing their capital gain go down. That's not good, man. And on top of that, you have these companies that oh man, it's just a figure. We're going to be down in a little bit. We're going to go back up. Imagine you investing. You was at, and that's another thing. A lot of people don't pay attention to these companies that's consistent moderate buy. When you're looking at when you're looking at, let's say, a month, right? You're looking at a month or 6 months. I think 6 months would be better. You see the peak was at 94. Now, I think when you max it out, if I'm not mistaken, they really, the highest peak was like 107. Now imagine investing that 107. You buy 30 shares on 107. I'm curious. Let me get the calc out. 37 shares, 107. I think times 37 shares. That's around $3,959. Now you take a hit of that $3,000 you invest in Netflix. God, bro. Look, you're at 107. You're at your peak, but this is not good, bro. People are looking at, man, well, Netflix making money, but the investors look at it as, we losing money. Y'all need to do something. Get these ads going. That's why they made the ad tier, because they weren't making no money, because people were leaving, because you're competing with Disney. You're competing with Paramount. You're competing, which I think Paramount got the best deal. I'm actually consider switching into them, because you got UFC, and shoot, Paramount is Paramount did a big move. We're going to get into them later, but Paramount did a really big move, because they acquired UFC and pay-per-view, and heck of a deal, and it's cheaper. So, man, you still pay the same price, but you get way more content, I believe. So that's just me, pick whatever you choose as far as Netflix and Paramount. I think I'm gonna go to Paramount, but don't get me wrong, Netflix do got the hits, Martin, all that stuff, whatever. But Netflix, I think, are getting greedy, and a lot of people are noticing that the money that they're putting in not getting out. Plus the password thing that happened, you can't use different passwords, they lock you out. Then you got to pay for it to use it at certain areas. Let's say if I got a Netflix account and I want to use it at this person's house, I can't use it unless I'm on my phone. That's the only way location to see my name. So that sucks. They took that feature away. That was the feature that had Netflix actually thriving. You know what I'm saying? You can have your Netflix account, whoever paying for it got to log in and watch it. So that was the chokes of Netflix. So, to each his own, whatever. But overall, investing in Netflix right now, I think is a bad move. But if you feel as though it's in an ETF or a weekly, you might take a hit. But yeah, I'm going to start getting into the weekly too as well. I'm going to do revenue on that too as well. But overall, Netflix would be better in the ETF, but solely investing into it now. The people that invested to it back then, I was like $120 a share, if not over. Y'all are taking a big hit right now. And that's like a good $10 off. So imagine you people that bought about 40, 50 shares of that stuff. It was at 120. I know y'all pockets like, oh, why did I invest in Netflix? Oh yeah, be mindful of what you invest into, especially as a company that you don't know you're using yourself. So I hope you enjoy. This is all financial advice. I hope you enjoyed the video. I'm gonna catch you guys on the next one.